Happy Sunday, traders. Trader Geek Sam here with your Sunday, March 8th, 2026 market review and preview video. Hope you're having a great weekend. And we're here a little bit later. I wanted to wait till the futures opened before recording this. And at the moment, we have a little bit of red, or should I say a lot. S&Ps are down about 110, well, 106 points right now. NASDAQ down 372 points, and the YM futures down 874. So basically about 1.5 to 2% down the board, but a small cap's taking it on the chin, down 3.68%. That's futures, but it's way early to see. At one point, gold was up to about $5,210, and now it's down at 51.44, and crude hit a high of 111.24, and now it's sitting at 108 and about up 19%. So definitely seeing kind of the crude up, market down dynamic, and that stays that way until it doesn't. So, but you didn't come here to hear me recite what the futures are doing. You have screens and tickers of your own to do that. So let's take a look at what happened this past few weeks and where do we go from here. Starting out with Friday's action, the only thing in the green besides gold a little bit was the VIX up about 24%, hitting that 29.49 level, just right below 30, and just above one standard deviation from the average, which is 19.5. And the next level for second two standard deviations is the 35 level. So hopefully we don't get there, but everything on Friday was down, and Bitcoin being the leader to the downside. Mid caps, which have been a leader, giving back 2.34%, and the small caps down 2.29%. Mag 7 down 1.88, and the micro caps surprisingly resilient relative to the mid caps. If you could call 1.64% to the downside resilient, and the Qs losing 1.5%. Looking at the major markets for the week, VIX almost up 50% on the week. And despite the losses on Friday, Bitcoin did gain 3.77%, and the dollar showing strength up 1.44%. Mag 7, not too bad on the week, losing about 559 basis points. But if Sunday night's futures opening is portending anything, is that most of the stuff will be down at the open. Mid caps giving back 4.5%, IWM 4%, micro caps down 3%, the Dow 3%. So 2% or worse. SPY basically doing okay last week, if you call 2% okay. And high yield bonds starting to see a little weakness there. And so we've got the correlation with high yield bonds and equities. Aggregate bonds down 1.25. If we look at the month of March, which is not necessary because it's the same as last week, so we'll move on. Quarterly, year to date, you see the VIX almost doubling, 97%, and for sure with the VIX up about 10% right now or on the overnight markets. We'll definitely see this above the 33 level on the open if this strength in the VIX persists. Gold year to date up almost 20%, and micro caps down 3.34%, with mid caps still up 3.28%. I'm sorry, micro caps up 3 and 34 basis points. IWM small caps still up 2%, though with the weakness in the overnight markets, we could give that all back tomorrow and then some. Dollar up year to date basis. Bottom of the list, Bitcoin down 22% and down even more. Bitcoin's down another 2 grand as of this evening versus Friday's close. And then Mag 7 down 8%, Q's down 2.37%. So everything is kind of down on the year as far as equities go. Aggregate bonds up slightly, TLT up a little bit, and anything in the large cap space is down on a year-to-date basis. For Fridays, sector, everything in the red except energy, of course, and definitely not tracking the strength in the price of oil in the energy stocks. So up 0.16% when oil was up so much doesn't bode well for the energy stocks. And we saw a little bit of strength from the XLP, but I think the performance on the week was not great for the staples, given that we're in a very defensive market, or we should be. Transport's losing 3%. And of course, the airlines are hurting with the much higher oil prices. Hopefully, they've been smart enough to keep some hedges on. Metals and mining down 2.42%, and technology losing 2% on Friday. For the week, we see that XLE, the energy stocks, up a mere 1.16%. Could we say that they front ran the move? And that's the only sector up on the weekly basis. Communications, technology, telecommunications stocks, financials, everything down, with the worst. Metals and mining, despite the strength in gold and silver, down 7.72. Materials down with them, 6.65%. Transports, here you go. Staples, 4.7. So basically, across the board, all sectors except energy were down, and energy wasn't up enough to really say a whole lot. 1% is not that much. On a quarterly basis, which is also a year-to-date basis, energy is up 26%, IYZ, telecommunications 15%, and the staples still up 10%, 10.5% up on the year, with materials still up 10%. So that last week not doing, undoing a lot of the gains so far. At the bottom of the list, financials down 7.67% on basically private credit worries. XLK, technology down 4.5%. Discretionary down 4.16%. That's primarily Amazon and Tesla. XRT, retailer stocks down 2.6%. Looking at industries, we'll just look at the weekly basis. There you go. XOP, exploration production, up 6.77%. Cyber stocks regaining a bit based on the software strength. It's about time, up 4.91%. And there you go. The software stocks were up almost 4%, finally bouncing back. And you have, oh, look at that. Cannabis stocks up 3%. Worst one, GDX, giving back 12.48% last week, with ITB home builders losing 8%, and so did the robotics ETF 8.2%, and the very strong semiconductors losing about 6.35%. Moving on to the quarterly and year to date, we can see that exploration and production, clear winner, up 30%. GDX, despite last week's bad week, up 18% year to date. We started the year at 85, we're still at 101. ITA, those are the defense stocks, not the defensive ones, 12.81. And we have the solar stocks up 8.5%. Semiconductors up 5.67%, and robo stocks up 3.85%. Worst is software still, despite this latest week's strength. Cannabis stocks, where you expect them, in the basement. KWeb, Chinese tech stocks, down 13%. So are the internet stocks, blockchain stocks, cybersecurity stocks, even though we had a nice week. And entertainment stocks down 3.31%. So Mag 7, take a look here. Google down 4.22%. Apple losing 2.5% on the week. Microsoft leader finally bouncing back 4%. Amazon eking out a gain 1.53%. Kind of disappointing to see it give back so much on Friday. Nvidia was up just basically a third of a percent. Looking at Mag 7 on a year-to-date basis, all in the red, with Meta doing the best and Microsoft doing the worst. But they're all down on the year, so not a good year so far for the Mag 7. Switching gears a little bit here, so that's kind of your review. Let me look and switch to something cleaner here. And if you call that clean, I'm a top-down trader, and so I show you the daily chart, weekly chart, and the monthly chart. And so we will start with the daily and move on. We have a bearish chandelier stop and a bearish PSAR, parabolic stop in reverse. So volatility stop and a kind of a trailing range stop, bearish PSAR. Bouncing twice off the 150-day moving average here. And actually, we bounced off the 67.20 level twice. And based on the futures action, we're going to break that. And I think that was the November low, if I'm not mistaken. Taking a look at December low. Yeah, no, December low. It looks like we're, after bouncing off of it twice, we're going to take it out with authority unless the futures recover overnight. So that's not a good sign for the bulls. But we are definitely outside of the Bollinger Band, and we definitely have a downtrend going here. But even so, if we measure from here to here, we're barely down 4% here. If we say take out another 100 points from 67.40 to 66.40, it's not going to display it for me. So probably another, just basically 5% from all-time highs, even with tonight's decline. We shall see. We're a bit away from the 200-day, which is at 65.82. Don't think we can't get there, and very quickly in these days. You can see here the options implied expected move for this week. The bottom edge is 65.15, and the upper edge is 69.64. And that expected move for this week is 224 points versus last week, which was 144 points. So got to have your big boy pants on for trading this week. And you'll see that if it's 224 points, we already traversed half of that, and we haven't even opened on Monday. Again, anything can happen overnight. Good news could come in and we could shoot right back up. But I don't think that's really going to happen tonight. But we have seen strong recoveries, if not overnight, but in the daytime trading session. So MACD definitely negative on the sell signal below the zero line. Not much more you can say. In a downtrend, this is definitely a bearish chart on the daily under the 21 and the 50. And now under the Bollinger Band, although we tend to have a snapback when we're under the Bollinger Band. Moving on to the weekly, bullish chandelier, bearish PSAR. We just got that flipping to bearish last week. So we've taken out one ATR stop here, and we are breaking out of range. And given that we were in just about a 200-point range, we definitely could move down to that 6,500 level after staying in a range for so long. But we could also fail on the downside and move right back up. So nothing's a given in the futures market what will happen. during the daytime trading session can be totally different than what we're seeing in a thin, illiquid market overnight. So don't rule anything out. Down here is the 50-week. We still have a bullish chandelier, but that's right here, and we could take that out. MACD has been on a sell signal since November, so that's not telling us anything different than it was. We have RSI middling right at the 50 level, and we also have, by the way, RSI getting oversold on the daily. We're at a 38, not quite at the 30. These days, we tend to get to about the call it the 32, 33 level and bounce. So we're pretty close, and we are getting pretty oversold on the indicators. Bullish chandelier, bullish BSAR on the monthly still looks good. We did take out the February low last week. That was the 67.75 and closed below it, but the month is not over yet. And we are at risk of taking out the December low, which is right here at 67.20. And the options implied expected move would take us all the way back to the November lows, which were at 65.21. So don't think that cannot happen. It can happen. And we could have another strong bounce here. It's still too soon to tell. MACD looking like it wants to flip negative. This is a monthly MACD, so it takes its time. And look at that. After how long? Since July, we've been in the overbought area. We finally looking like we're flipping to out of the 70 overbought area. But again, it's still too soon to tell. But you look at this chart, bullish. Call this neutral at this point and bearish. So uptrend is still intact. Bulls have the advantage in the intermediate term. Bears have it in the short term. So we'll see if the bears can capitalize on what's happening so far. Switching to the NDX, the NASDAQ 100, similar picture. We're below the 150-day right here, but inside the Bollinger Band. Stocks or the technology stocks and NASDAQ stocks were looking strong, but on Friday, it looked like the fast line on the MACD was going to flip back over. We have an RSI at 43, a bearish chandelier, bearish PSAR. I definitely have a downtrend line here. Let's see if I can get a percentage here. So year to date, from high to low here, we're still only less than 6% from the highs. But again, anything can happen, and we're already down 1.5% in the futures, and it looks like our MACD might flip back to a bearish. Here's the 200-day, the red line, down at 24,194, and the options implied expected move on the NASDAQ is about 925 points. That's about 50% more than it was last week. And you can see the upper edge up here and the lower edge, and we are gapping down around 275, 300 points. How much is it? 375 points at the moment on the NASDAQ futures. On the weekly, a bullish chandelier, bearish PSAR, so we have a mixed stops here. Here's the chandelier stop. We need a weekly close below this to trip that particular weekly stop and give more ammunition to the bears. We've got the NASDAQ under the 8 weekly, 8 EMA weekly, and under the 21. Not a good thing. MACD has been on a sell signal, and that has been since November as well. We have an RSI that is right in the middle there, 49. And so it's not yet oversold on a weekly basis. We've got a downtrend line going here. And if we look at the monthly, you can see the bullish chandelier, bullish PSAR. We've got another, lower low on the monthly charts, although we just haven't gone anywhere. Look at that. We have a long tail, doji, another doji, and forming another, wouldn't you know it, doji. MACD looking to flip negative, the fast line over the signal line, and we have the RSI. Month hasn't closed out yet, but chances are we're going to have a close below the 70 overbought level. And that's what you get when you are in a correction. So it's not that unusual. Finally, we've got RUT, not looking good at all. We can see I drew a downtrend line, bearish chandelier, bearish PSAR, and Friday was just not looking good at all, and way outside the Bollinger Band. So due for a snapback under the 100-day right there, and approaching the 150-day, and there down there is the 200-day. You can see the options implied expected move here, and for the rut, that's about 107 points. Again, probably 55 to 60% more than last week's expected move. Obviously, on the lost my train of thought there. Obviously, we can get all the way down here with the options implied expected move, but hopefully we don't. But we did lose quite a bit of ground on Friday in the small caps. Here you can see the downtrend line more clearly. We had a bearish topping tail on this particular candle. MACD has flipped negative. So whatever strength we were seeing up here, we're now breaking that consolidation to the downside, taking out this particular candle in early January. And then we have a MACD or an RSI that's middling right at the 51 level. Finally, on the monthly, bullish chandelier, bullish PSAR. Again, can't seem to break through this, if you want to call it a flag or a bull flag or what have you. But MACD is still solidly positive, not quite yet ready to flip over. But we never really got overbought on the small caps despite the strength early in the year. And we're at the 61 level. So call this bullish, but we stopped one-time framing from February. So besides this 1, 2, 3 months, one-time framing higher, no low of any month violated the low of the prior month. But this time so far, we have. So call this bullish, call this neutral, call this bearish. Overall, long-term, still in an uptrend, intermediate term and short-term, neutral to bearish at this point. So definitely warrants caution if stating the obvious. So finally, we get a VIX that's getting jiggy with it. And at the moment, we have a VIX VIX futures are up 7.8%. And we had a candle that closed on Friday, obviously ahead of a news filled weekend, as was expected. We had a little bit of a rally in the VIX into the close, and we closed at 29.49, clearly above the 200-day here, so not even close to it. MACD solidly positive on the weekly, and we basically hit the 29.93, not quite 30 yesterday, but we will hit it tomorrow based on what the VIX looks like in the overnight markets. So we're finally getting a little bit of fear in this market. And on a weekly basis, we can see that now we took out that chandelier stop. We got bullish chandelier, bullish PSAR, same here. Obviously, don't pay much attention to the monthly, but it's also looking good. But we for more volatility. But there you have it in the 29 level, and VIX sellers or volatility sellers are on the run. Speaking of VIX sellers, these are the VIX buyers. And this is the VVIX, the volatility of the volatility. And this is a measure of institutional call buying in the VIX. And anything over 100 is concerning. Over 110, then it really has my attention. We closed at 140. That's one of the highest levels we've seen since, call it October last year. We had a topping tail here in September. And on a monthly basis, you can see here a lot of topping tails, and we're early in the month. But 140 is duck and cover type of action, and it is a serious thing in terms of the volatility. Speaking of which, let's see what the options are telling us. We have a VIX futures and options expiration, monthly expiration, coming up on the 18th of March. We close at 29.5. We'll call it 30. And, this obviously didn't portend the action here. So if the action overnight at a 30 level, we'll call it, we go out to the 31s, and those 31 calls, if you're bearish on the market, on Friday's close would have cost you 2.25. Go out and buy the puts for the 28 puts, and those are pricing at 485. So call the puts pricing at about $2, 2.5 times the calls, which gives the advantage to the market bulls here because the puts are 2x. But believe me, we can see this 5, 6, 7x before it can matter at times. But the bulls do have the slight edge, and in fact that the puts are priced so much higher than the calls. But this is an indicator that can dissipate very quickly in a matter of a few hours of rally. And we could get back to where VIX calls were more expensive than the puts. So VIX options saying downside limited. Futures are disagreeing, given that we're down over 100 points, which is not terrible. We're not at a 2% or a 3% level that we've seen in volatility events like this. SPX. As I said, here we go. The options implied expected move right around 224 points in a week, a full week that we have of trading. So lots to do. You can bet that we're going to see every bit of those 224 points and maybe even half of them by the time the market opens on Monday morning. Looking at what we've got going on economically, we have nothing on Monday except news and tweets. Tuesday, NFIB optimism, existing home sales. And then Wednesday, we do get the CPI for February and core CPI, and lo and behold, the federal budget. Thursday, our typical jobless claims, U.S. trade deficit, and housing starts. So we'll get the temperature of the housing market this week after we had a dismal monthly jobs report for February on Friday, losing 92,000 jobs when they were expecting a positive 55,000, I think it was. Yeah. So building permits, housing starts on Thursday. Hopefully we see some more positive news with the interest rates going down. And then Friday, first revision of fourth quarter GDP, ancient history, if you ask me. Personal income, so PCE index, the Fed's preferred inflation measure, coming out at 8:30 before the market, along with durable goods. And we have job openings at 10 a.m. with consumer sentiment at 10 a.m. So Friday's chock full of potentially market moving economic reports. And Thursday, we have the jobless claim. The jobless claims, and Wednesday CPI. coming to the tail end of earnings season with still a lot of retailers yet to report. Um, Nothing really earth-shattering on Monday, but on Tuesday, there's your earnings for retailers. Kohl's, not sure how much relevance they still have. We've got Oracle in the afternoon. That one would be an important one for to hear what they have to say, especially as it concerns the AI and data center spending. Wednesday, you get your soup. Um, you've got your uh, Pet Supplies, Petco over here reporting. Thursday, more retailers in the form of Dick's Sporting Goods, Dollar General reporting. Some of you trade Futu, I know, and that one's reporting. After the close on Thursday, we'll hear from Adobe, one of the software makers, and Ulta Beauty, another retailer showing up. Nothing really on Friday that we care about, but trickling down into some important earnings reports. But for the most part, it's been a very successful earnings season with beats on the top line and the bottom line. And what do you expect when they set the expectations so low, so to speak? In any case, what we have here is a breakdown in the short term. Um, this is basically the bulls in the short term ceding their advantage. This is no longer the typical buy the dip environment. I think you got to be careful. You got to pick your battles with the VIX at 30 plus. This is not the time to play fast and loose with the stops and what have you. So be careful out there. What I think is, we could wake up tomorrow and the market could be down 100, 150 points. But as soon as the market opens, we could bounce back on any bit of good news. So don't get too biased in one direction or another. This has been a resilient market. It has refused to go down. And now we have an oil driven market. And that can change very quickly. So we've cleared out a ton of shorts on the oil. And if we get any bit of good news, oil prices should come in, and that should mean good things for the market as we get to a more oversold level. So be careful out there. I appreciate you watching and listening. If you have any suggestions for me, at Trader Geek on Twitter, give me a follow, or Trader Geek Sam in the forum. I will talk to you next week, and good luck trading in the coming week. Bye-bye.